The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. Of course, we will not be here tomorrow. And in fact, I'm going to make today's session a kind of an overview that really goes into next week, because there's a real good chance that I will not be here Friday. And if that's the case, I'm going to make this a very comprehensive look at the markets. And thank you, Steve, for a great 2 hours. And everyone, I want to wish you just a great Independence Day. For many of us, many of us, immigrants who have come here wanting to, I would say, in a way, better our lives. It wasn't necessarily the case, but wanted to live in a country that has the greatest freedom. Our dreams have certainly been fulfilled for many of us, and we absolutely do appreciate it. Of course, I've been here a lot longer than many people have been born. Yeah, right through the Vietnam, end of the Vietnam era, the Nixon impeachments, etc., etc. And I've seen America swing from one side to the other. And the most exciting thing about the United States, and that I only hope that just continues and continues and continues, is that there is always a swing from the left to the right. And as long as we can keep swinging without one side predominating, I think that's the excitement. Why? Because it forces creativity. It forces you to rethink. It forces you to think out of the box. Yeah, we've got a whole bunch of rules and regulations coming up with the administration that's here now, changing things in many cases forever. But we'll work through these things, and that's the exciting stuff. Not only that, where else in the world can you have the choices that we have? And that really is the most important thing. So, I say thank you, America, and love being here. Just don't like those many winters that I've had, decades of winters. So we could always move, but this is where we live. And, you know, Boston's a wonderful place. It's really like a big college town. It has the arts, it has the sports, it has you got the beach not too far away. You got a beautiful river that cuts through. You got a growing city. In fact, our mayor, Mayor Menino, who's on his way out now, has done an incredible amount of work in trying to reestablish points that were really in disrepair, etc., down the waterfront, to rebuild. And that whole waterfront, that whole gateway there by the I always forget, seaside, harborside, that whole area is just where Anthony at Pier 4 was. It's just an incredible thing with the Museum of Modern Art. I love this. So it's exciting, and let's hope we got another exciting year coming. Of course, market-wise, we don't really care, up, down, sideways. In the Chapman Wave methodology, we trade what we see. Now, talking about trading, we've got a market here that says all that selling early in the morning and those deep discounts with the futures down, etc. Europe down sharply. Well, we've got a bit of a turnaround here. The Dow is up 5. Isn't that interesting? S&P is down 4. Let me run the numbers. In fact, I forgot to put this up. I'll run the numbers and then we'll go through everything that I would like to go through. Here we go. It'll be a moment and it'll be up. And while I'm doing that, I want to also talk about certain trends watch areas that I've been looking at. One that I looked at in great detail back in 2000, and I'm going to come back to it now, are those mega fun places that you see. SIX, SIX, what is it called again? Let me just type in SIX. That is Six Flags Entertainment. Well, when you get roller coasters, and you start to see a competition to see who can get the fastest, the biggest, the tallest, the scariest, the most ridiculous. That's another area that I'll be looking at as a topping sign. So in the meantime, we're just starting to get those, and I'll be going into it in greater detail as we move along. The Dow is up 9 at 40,942. The S&P is down 4 at 1610. The comp index is down. Comp index is up 6.68 at 3434. I'm just going to write this number if you don't mind, because this is a person I've been wanting to contact for I couldn't even tell you how long. Wow, I'm so pleased. What a wonderful coincidence. I can't take it now, but this person was a former student of mine. He used to work for Raytheon or Lockheed, one of those companies, and he was a student of mine for years. And then he moved to the Cape, still remained a student, just to come in from the Cape, a clarinet student, that is. And he was a jazz player. He saw himself through college as a jazz player, went on to become a salesman, fabulous salesman. And he called me about a year or so ago, and he had a little problem with his left hand. We talked about it. And then he disappeared. I could not find him. I tried all the different numbers, couldn't find him. There it is. So I will be calling Richard very, very soon. What a thrill. That was great to see that, because I've just been trying so hard to reach him. So I'm pleased that he's around. So now we're going to go back. The comp index is up 0.80 at 3434. Most importantly, we're starting to see gold have a little bit of action. The GLD is up 121.49 at 144. Gold is up about $12 in the futures. I'm going to talk about that in a moment. Silver is, where did silver disappear to? Silver is up 45 cents at 1976. High-grade copper is kind of stuck at the 3.1 area. Most importantly, we're looking at bonds, and the TLT at this particular point is at 110.34 unch. It is in a trading range and is trying its best to hold, and I like that. I think that's going to be very important. And the dollar, now let me go back to my white background charts, because that's really what I want to do here. If you're looking at Tiger TV, I will make these as clear as I can. Yep, the black's good, but I'm beginning to define the white ones with different things. I've spent some time trying to get them a little bit more defined, and I can see they're coming up here. The dollar is in leg D at 83.37. Let me just quickly go through that. In the Chapman wave methodology, what we always look for is the lowest, most identifiable a low bar. In this case, it was 80.50, the low of the June the 13th. When it runs up to peak A, just a fractional new high the next day, pulls back, retests the 80.50. Now, the one change that I've made to the CD book that I wrote about, completed about 6-7 years ago, there are a couple of just minor changes, but this one is quite important in that I do count a double bottom or low. It used to be just the futures and esoteric charts, but now in all the charts, if there is a double bottom retest, let's say you made 80.50 and you run up, you make a peak A, then you pull back and you hit 80.50, but you don't go to 80.49. You cannot break that left side low. If you hold that left side low and start a new move to the upside, that is a very important breakout. That starts your next leg up. So that's the only change. So introducing the Chapman wave methodology. This is a chart analysis of the stock market. This is a 476 slides, 27 or 28 chapters, a glossary of about 8 pages. It is just a comprehensive look at the Chapman wave. What does it do? It tries to define. Let me just show you here. You see these bars where there's nothing, just the bar itself? When you go to the lowest, most obvious left side low bar, it's right there. And then you start counting, and you go peak A. All you're doing is counting each successively higher peak. Let's just say that top was 20, and it pulled back, and it made the next bar had a high of 19.99. That's a peak, even though it's 1 penny. Let's just say that was 20,000. And you made the next bar was 19,999.99. That's a peak. It took me a long time to find it. I used to use percentages and all. 1 penny. That's it. Case closed. So that would be a peak. 1 penny above that. If it was 20 and it went to 20.01, that starts leg B. And I call it a floating letter until the peak is completed. Now look at this. It just means nothing to see these bars. But look at the information you get if you start to go peak A, B, C, D. D's where you can. You don't have to, but you can expect a sharp decline. Look what it does. Sharp decline starts to brand new A, B, C, D. Sharp decline. And then it goes to fractionally new highs, E and an F. And I won't sing the Chapman Wave song, but F is where you want to watch for, because if you get a peak F, and is coincident with fading technicals and shorter time frames already given sell signals, that can be a pretty deep sell-off. That happens to be the sell-off from 1987, I believe. And I believe that was a pretty deep sell-off. Okay, so now let's go on. And what I want you to do is I want you to say the dollar has made a leg D. It isn't a peak D until you get a lower high bar. Let's imagine that on Friday, there's a high of 83.71. That makes peak D. That's just number one. Look at the black line. That's the 9-period moving average. Hasn't broken it. 0.89. It broke out on the June the 20th. Never look back. The MACD, fast moving average, FAS. TMA, that's how I usually write it for my subscribers in my opening call. That's my service, my comprehensive daily service that gives buy and sell signals. Now look at this. That fast moving average is still very strong. The histogram, those little bars that are now green above the 0% line, are very strong. It's holding at 92%. That says to me that any rally in gold is going to be independent of the dollar unless the dollar pulls back sharply. But in the meantime, it looks like the dollar might want to make that Groucho Marx eyebrows double top V-shaped pattern by trying to get back close to the 84 and a half area. So I want to just quickly go through one of the techniques that I use, one of the ensemble of the techniques that I put things together with. Now let's go to Ken in Fort Madison. Hi, Ken, how are you? Ken, you there?
Yes, hello.
Hi, how are you?
I'm very good, Basil. Thank you. I'd like to have you take a look at Freeport McMoran, FCX, and SLW if you have time.
Okay, now just tell me, do you have any position, or is this something you're looking at in the meantime because it's had such a sharp move down and you're thinking that it could possibly be a trade or maybe a short? What's going to be the position?
I'm looking to buy it as a trade. I don't have anything in Freeport McMoran. I do have a small position in SLW.
Okay, good. So now let's just do this. I'm just quickly finishing up my notation here. Remember the techniques that I was using, folks? I'm using it right here. So this is made a trough C. It's running in a nice leg up in A, but there are a couple of things that are happening on the daily. So let's do this. Let's go to the monthly. We go to the weekly first. The weekly had a very unusual pattern, and I'm just going to double check. I think I used this as 30.16, and then it went lower. Yeah, 30.08. I kept that going for a couple of reasons. In the week, oh, isn't that quick? That's the break. I'm coming up with a break right now, folks. We're going to do a little work during the break on the FCX, Freeport McMoran. They are in copper and gold, and they've been smashed to the downside. And we're going to see if there is a trade here for Ken and what we'd be looking at. I'll be right back. 877-927-6648. The Tiger Technicians Hour. Dow's up 39. S&P's down 1.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Basil Chapman. Okay, so what we're looking at here, folks, is Freeport-McMoRan. Moran. I don't know. There are different ways of pronouncing it. And, okay. In the 120-minute chart, I have it in peak E, and it's pulling back. You know, this is a very difficult one. Why? Because it has been, it has just come down so sharply from the recent highs. Even this last high here, just of 32.25, it's gone down to 26.37. But I looked at a chart the other day that I can't remember. It might have been FCX. But what was impressive is that it held the left side low, the 26.24 low of the weekly chart, the week of the 19th of April. So let me just type that in, otherwise I'm going to forget within 2 seconds. 26.24 has held because we went to 26.37. So that should be a big positive. But, you know, I don't understand why a stock like this, which holding the 200-period exponential moving average in the monthly chart, this is now the second test. It should have bounced, and it should have been, right now, it should be up at about 31.50, just based on all the things I'm looking at. The reason why I've avoided these stocks, this particular kind of mix of commodity with copper and gold, is because there's something, probably, it might be the gold aspect, I'm not sure, but I'm going to suggest something that says, if you want to take a position, I probably, in this case, would try to do it based on, let me go to copper for a moment. I'm going to go to Q for a second. Let me go to HGU. I'll go to September. There you are. Yeah, copper's actually acting quite nicely. All right, I'm going to do this. I know that what you really like to do, Ken, is to get the position and then kind of hold it, anticipating that there'd be even a stair-step move, and you're prepared to put up with the bumps and grinds as long as the trend basically is changing to the upside. Isn't that's true, right?
That's pretty much right, yes.
Yeah, now, I also know that you are, if you feel comfortable, you're also prepared to put in a stop and say, hey, I'll give it a little leeway, I'll start small and give it a stop. But in this particular instance, I would rather buy strength. And it might be that it gaps up overnight, I don't know. But I'll tell you what I would prefer to do, because based on the 120-minute chart, based on the weekly chart, based on the monthly chart, this daily chart, leg A, yesterday shouldn't have been as deep a pullback, and today already should be about 28.80 instead of 27.58. So here's my recommendation. Yes, you could start a little position right now, and that could be vulnerable to a dip and a retest in the 27 area. 50 cents, big deal, 50, 60 cents. But if this thing breaks underneath 26.37 and the dollar goes higher and copper suddenly starts to pull back, there could be a really quick further break underneath the 200 period moving average in the monthly chart, the weekly and the monthly chart, but especially that monthly. So my preference is to say buy strength, but I'm also going to suggest something. Why not get yourself just a handful of shares, 5, 10, 15, it doesn't really matter. And that way you're in, and the reason why, because as gold and copper are moving around at this particular point, because gold, the GLD is up $1.24. Even the GLD should be up at about 122.70 at this particular point. I'm looking at this and I'm saying, wow, when trends are in place, it takes a tremendous amount to get them to reverse to the upside with strength. We did not get the V-shaped turnaround the other day in a news-related turnaround. It was just a technical turnaround. So far, I'm a little disappointed in the action, especially with all the international problems going on right now. Gold, in fact, should be much higher. Now, the day's young. It certainly can do that. Crude oil went higher. So here's my recommendation. Just grab a couple right now at 27.58. There's a big reason why I'm saying that, because the H pattern in the weekly chart will become really positive if without taking out the low of 26, I typed it in now, 26.37, 26.24, that low range, without taking out in the next week, if there's a move to 31 or 31.50, we could be at least making an M pattern after the H pattern, lowercase h, and that says there's a whole bunch of information having successfully not tested 26.24. Instead, it held beautifully. If it breaks to a new recovery high, 32.50 at any point in the month of July, that's going to be very positive. So, Ken, take a little bit right now, have about a point stop, and let's see what happens. We'll look at it again on Monday. Thanks for calling. Have a great weekend.
Thank you. You have a good one, too. Bye.
Thank you very much. And we'll be back with Travis straight after this break.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back. Dow's up 43, S&P's up 1. I'm going to talk in a short while. I'm talking about the positions that I have, my opening call for subscribers, as well as why I decided not to do something today. I could, whenever you can go either long or short a particular instrument, I just look at it and say, hey, if I haven't got direction and I'm guessing you can go up or I'm guessing you can go down, you know what? Take a walk. Don't even try it. All right, we're going to go to Travis in St. Louis. Hi, Travis, how are you?
I'm fine. Good morning, Basil.
Good. You'd like to look at?
Yeah, I want to take a look at Walmart, but I also want to share just a quick thought with you as we transition into the stock. I was out with some friends and some family a couple of weeks ago during that little, let's call it that correction that we got off the Bernanke comments.
Right, yep.
And the conversation turned towards the stock market and where we were currently at. And a lot of my friends and family have exited the market well below 10,000, let's say, on the Dow.
Okay.
And
well below 10,000.
They've gotten out either during the crash back in 2008, 2000.
Right, that whole March, that February, March, April period, a lot of people got out, yes.
Right, or they exited on the way back up and have missed the last 40% or so to the upside.
Okay.
And so it kind of feeds back into what you've been talking about, I know, over the last few months and over the last year or so, that you felt like we were in a longer, a mega bull market, if you will, and you'll see the rotation start to come through during corrections.
Yes.
And so I'm starting to wonder, because during this getting back to whenever I was talking to them a couple of weeks ago, they were all talking about, well, I really would like to get back into the market now, and it's funny how that works, but they're thinking, oh, I think we're going to get a pullback back to around 1,500 on the S&P, and that's where I'm going to get back in. Well, you know that we kind of ran short of that a couple of weeks ago at like 1560 or so.
It looked like it was going to get there, right?
Right, and I'm thinking in my mind, wouldn't it be funny if this well, maybe not for them, but wouldn't it be strange if they don't get that opportunity yet again, and they have to start to chase this market if it starts to break out above, say, 1650, 1687, the old high, and it doesn't give them an opportunity to get into these levels that they think they're going to be able to get back in at. And that's how you get that blow-off type top like you're talking about, the peak D and the peak E in the monthly chart.
Right. So, okay, let's just put that into perspective, because that's exactly what I wanted to talk about, since there's a chance that I won't be doing my show on Friday, so this is going to be an overlap. We'll do this. This will be repeated on Friday. So, Travis, this is what I wanted to look at. You've got a question here on Walmart. Now, Walmart's a really good example of Middle America, I would say. This chart represents the buying of goods. Not services, but goods. So Walmart is WMTs at 74.98. It made a high of 79.96. That's only that's about 5%. It's 5% off its high, all-time high. It's walking the 9-period exponential moving average. The MACD and stochastic are pointing towards the negative side, but the price is holding. So in that context, it's had a very sharp pullback from the pullback that it had in the weekly chart, in the cup formation, and it really looks like a cup and handle, and it's broken down more than a third of the way from the bottom of the cup to the top at 79.96. And now this is going to be very important. It is holding well, but underneath the 9 EMA in the weekly, and the daily says, you know what? There's a chance. This is exactly the chart that I was looking at with Ken in Fort Madison just a moment ago on FCX. This is a much more positive chart, far more positive chart than the FCX, because it went to peak A and has used up time to pull back rather than that sharp move that FCX has had, at least today. So if FCX is able to go sideways for another day, and then by Monday start its climb to the upside, that'll be the chart pattern. It's a much better chart pattern. I'm only talking chart patterns now on the daily. Now look at this. In Walmart in particular, what's happened is we can call this a high-level consolidation. Stochastic's not good in the weekly, and the MACD and stochastic in the monthly are right on the cusp of breaking down. If this goes under 72, it's going to continue going down. I'm looking at a number of stocks that are on the cusp of either holding, breaking out, or breaking down. That doesn't happen in the market very often. I'm talking long term. I'm talking about the bigger context. Now, if that's the case, then what we're looking at is the chance that if family and friends were doing what I'm desperately trying to do for my subscribers, I'm looking at specific stocks. I'm trying to be market immune. Right now we're about, I think we might be able to get one particular index that I wanted to go short, but that's something completely separate to the major market indexes. It's a sector. And in this particular instance, if they were looking at rotation, and I've been talking about this for 4 years, if there's a rotational correction, I'm going to show this S&P monthly chart right now. This S&P monthly chart says we've absolutely made a peak C, but so far, the wide-legged candle of last month, that is the month of June, is giving me very clear parameters. A break in the S&P in July, underneath a break means a close below 50.50, says you're going to look at even more time. Still a high-level consolidation, but it's breaking down because more sectors are starting to become vulnerable. But a close in July, even 1 penny above the high of last month, not the high, all-time high of 1687.18, but the high of last month of 1654.19, says, nice consolidation, taking time, not price, because of that rotation. Rotation into autos, rotation into certain financials. You remember, I had a call, if you were listening, but I had a question the other day on the, if I can ever remember the symbol for the, I don't know why I don't remember it. I look at it all the time for the financials, the regional financials, KRE, I believe it was.
Yeah, the regional banks. The regional banks are on fire right now.
Yeah, you see, if you're in the right sectors, you don't really have to care about the market at this particular point. Leg B, peak B possible, the KRE is going to go higher as far as I'm concerned, and we're looking at certain of the autos that are actually acting extremely well, and that's the way I want to look at the market. So my suspicion is that on those sharp 5%ers that we've had on the downside, tell your family, start a small position. Better to be in than not in at all. That's what could have been to their benefit all the way on the upside. And say to yourself, I'm taking a risk, but if I'm putting in my money, part of my money, in a 5% correction, let me plan to put in another 5% at 10%, and if it really breaks down and goes 15%, I'll put in a little bit more. In my particular instance, only because I'm expecting leg D in the S&P and the S&P and the Dow, and that says that whatever you put in, you at least should get back a good part of your money, if not make a pretty good penny on your third entrance and your second entrance, even if the first one just nominally makes some money. But overall, scaling in is actually the way to do it, because then you're absolutely market immune. You're not saying, oh my God, I just put it all in and I'm right at the top. I know I'm at the top because I'm the guy that put it in. I have a cartoon here. Wow, I wonder if I can find it. Where's my list? Oh, I messed it up. I had a whole list of all the I can't see it. Oh, what a pity. I got a great I'll try to find it during the break. In my CD introducing the Chapman Wave methodology, I was once a cartoonist, and I had a whole bunch of cartoons on the stock market, and there's one there that I think fits absolutely appropriate there. So yeah, that's what I'm thinking. I wanted to get, for subscribers, we went in and out of Dunkin' Donut. I said, this is one of the core ones we want. And then I took profits. I never got big. I never got a chance to get in. It's now at 44.99. Yesterday, it made an all-time high. I mean, you've got to be stock specific. And on the short-term pullbacks, if you want to go to 100% short or 200% short index, fine. But it gives me a chance to talk about my opening call. My Traders Corner this morning, I put the DXD, which is 200% short the Dow, and the DDM, which is 200% long. And I said, I'm going to wait. If I'm in the position where I could go short, a small position, or I could go long, a small position, I'm not in that at all. Let the market tell me. And that's, I think, the safest way to play it. We've had that 5% correction, and for some stocks it was pretty deep. Now what we're looking at is, if I pull up this chart of the long-term S&P, what I did for subscribers, and I hope I have in the next 5 to 6 days to be able to spend some more time on it, I've pinpointed certain areas that we were in a parallel move with those times before in the leg on the Chapman wave. And so far, it's done almost exactly what one would expect. And I was very negative when I saw the trend go over 20, because if the trend, the VIX, if the volatility index holds over 20, then all I can say, I did not mean to do that. Let me just correct that, SPX.X, and now change the chart, click on it, and $VIX.X. But that weekly chart says, wow, what chances are there on Friday that the volatility index is going to close above 19.95, which is a 200-period exponential moving average, if so far today it hasn't taken all the negativity internationally and pulled back? So I'm looking at the volatility index under 20, but certainly in the 16s, as being it's buying pressure. Make it easy. VIX is buying pressure when it's low, selling pressure when it's high. When this VIX starts, and it will at some point start to trade in the 20s, it's not going to stop at the 20s. It's probably going to go to the 32 level, even 38. But at this particular point, I'm not going to be fooled by trying to outguess it. It's telling me buying pressure seems to still be there. Day is young, and that's the way I have to look at it. Now let's get to your question. You wanted to look at?
We're looking at Walmart, obviously, and I'm just thinking, is Walmart's days in the sun over? I mean, are they going to be, they've been a big leader here the last year or two. And
they have.
And I'm wondering if this rotational bull market that we're in, whether or not Walmart will actually get some of those flows yet again, and it'll break to new highs. I've been in the shares for a long, long time. It's kind of a core position of mine. I've held it well over 6 or 7 years, and it's kind of like, I see the rotation going into some of the new leaders like the Starbucks, the Fords, the Amazons. You see the money rotating through the market, and those are breaking out the new 52-week highs as we correct 5, 6, 7% on the broad market. Walmart's not really showing a lot of strength yet, but it's had its big move already. And I'm thinking, do I want to lighten up on some shares, or is it going to actually come into favor as we start to break the new highs, possibly into August or something?
If you don't mind, I'm going to do something a little different to your question. I'm showing Costco, COST, trading at 110.81. It's made a peak D in the monthly. But this particular pattern, you need courage to be able to do this. It's really important to look at the technicals and say, as long as those technicals are holding, I have to be brave and just close my eyes and put my money there. Because why? It's walking the 9-period moving average in the monthly chart. In fact, it's just impossible to believe. But since September of 2010 at 58.22, the low was 49.76. Keep that in mind, 58. It has not once closed under the 9-period exponential moving average, that black line. If ever there was a beautiful technique, just look at that technique. So here's my recommendation. Now, what if I said to you, take that money when the weekly chart of Costco looks like, I've got to be careful here because that was a peak D in the monthly and peak D in the weekly, and is struggling real hard to try to get back above 112.59. If I said to you, Travis, take some money and put it into Costco. Now, normally, I would just have no compulsion, and I'd say, you know what, you've had a fantastic gain. It looks to me like Walmart as not just... It's not really worn out its welcome on the upside in the bull market, but it's actually looking a little tired, just like you said. That doesn't mean to say it has to break down. It just says it isn't the place right now that's going to be active. It'll be proactive if all the others kick in and it gets lifted up, but it doesn't seem to show its own internal strength. But Costco is saying, national discount stores, and I have to tell you, I was at a Costco in Brooklyn over the weekend, and I've been at Costco over here. I mean, they are just, well, it's local, so I really can't talk about it as if it's the entire country. But there are people that are there, and they come out with cartfuls. I don't know where they put the stuff. So I'm going to suggest something. Think about it, and at the same time, why don't you take a little bit, and as an experiment, because they both have the same daily formation or the same weekly formation, see if Costco is starting to act better in relation to Walmart. And then you could slowly migrate a little bit into the Costco, because that's the same kind of the same sector, not quite the same discount, but the same sector. And I would rather go with the stock that's showing leadership and strength than the one that's showing some weakness, even if it's just at this particular point. So I hope that helps you.
Absolutely. Have a great fourth.
And you too. Thank you so much for calling. Always enjoy your calls. That was Travis in St. Louis, and we are now looking at the Dow 38. I'll be right back, and we'll give a summation for Friday where I won't be here.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, Basil Chapman, we have some fabulous callers here. We had a caller just recently, Freeman called, and he wanted to know, he had typed in, instead of BSX, which is Boston Scientific, he typed in BXS. And he said, wow, it looked good, and he bought it. I can't remember, I think he had bought calls on it. And I said, it looks great. And, you know, serendipity plays a part in identifying stocks. I believe in that very strongly. Look at this. It screamed from about the 17 area, I think it was, that he was in, maybe 16, 17. It's trading at 18.22. Yesterday it hit 18.68. Now, I just want to use this time. I'm going to go through a bunch of things. Our bias in my opening call is, at this particular point right now, as we speak, is to have one short. We might be getting a second short if everything works out. I don't know yet if it's going to work out. We've got one short, and that's working, and we have longs. Most importantly, we've also got a mix in a very diverse portfolio. I want a diverse portfolio because I want to be able to look at what I think is the very best. Our auto position in an auto company is working out really well. I want to see how that can do. So, and I've taken a stock that should be a good dividend growth. It's not a dividend stock. It's a good dividend growth. It might be slow at this point because it's digesting recent gains. I like that. So this is very specific. If I look at the IWM, look at this, IWM. Oh, I wanted to show this chart here just for 1 second. This is high-grade copper. This is September. Look, this is the chart that I wanted in the golds and and in the charts that we were looking at with Walmart and in particular with FCX Freeport McMoran. I wanted to see a peak A then a B, and now a C today, and that's exactly what we've got. So copper is acting quite well. It's been smashed to the downside, but I love the action right now because it's a relief. Even if it's a relief rally, it's come in, and it's come in after the H was formed, and it's gone to lower lows. It says the left side peak of 3.25 to 3.256. That's going to be really strong resistance. If it can break above that, that's very positive. It's giving me clues. So now IWM is having a high level consolidation. It's made a peak A. It's going to fail. Very simply, it's at 98.36. This is the Russell 2000 ETF. If the IWM closes underneath 96.82, about a point and a half from here, it says be careful. You can make that H pattern, but as many of you know, I love looking at that pattern I call the falling axe. The moment, if it's able to do that, it closes above. It mustn't just get there. It's got to close above 99.72. Then 100.38 becomes the immediate target to the upside, and that's a high-level consolidation in the monthly. Very important. If I look at the, let's go to the Dow, INDU. The Dow, same thing as this down channel. This is what I call the falling axe in my Chapman wave methodology, introducing the Chapman wave methodology. That is the CD book that I sell on TFNN. In fact, today's low was lower than yesterday, but that's a long-legged doji. If there's a close below, I got it real simple, below 14,870, then we start that H pattern, we go down. If there is a close on Friday, hopefully it's Friday or Monday, above 15,049.22. It says, great, I can now tackle leg C above 15,083. But it's still a very quick ABC. I need power. I wanted to test that dash downtrend line. I want to see the Dow testing 15,161, and it needs to do it by next week. All right? Now, let's go. We've got, and the weekly chart is the one that was really important for the Dow. Why? Because it's had a pullback, as Travis was saying, it had this 5% pullback, 15,542 down to the most recent low of 14,400 and 14,551. So I want to see, so far we've made a slightly higher high than last week. That's important. So we've got parameters that are real clear. Over the coming 2 days, going into Monday, if the Dow is able to close somewhere around 15,020, I would like that very much. If it fails by the end of the day, goes under 40,970, not so good. Thank you for being here. Stay tuned for Larry.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.